So they don't. First of all, they don't have any money at all because they only have derivatives and they only have credit derivatives. Even the dollar is a credit derivative. When you allocate to gold and silver, you're not allocating your money to gold and silver. You are divesting from the system as if you could like tilt the slide of the entire system and then not expect everything to fall. Understanding it intellectually is one thing, but even if you could prove it, and I try to prove it, that's why I focus on the Misesian regression theorem or regression principle, that all prices have to go into the past because they all have to be based on the past, because otherwise prices don't mean anything. And if prices don't mean anything, you may as well be in a zombie apocalypse, because if prices are meaningless and nobody knows what to do, and then they start eating each other. Yeah. So you can prove that intellectually. But even for people like us who understand it intellectually, we still think of the dollar or the Canadian dollar or the shekel or wherever it is you are. We still think of that as money because we see our wallets full of that. Like you put gold coins in a wallet, you're like what am I in the 18th century? It doesn't feel like money. It feels like I'm a whacked out crazy guy. Right. Who's like carrying a pouch of gold or silver with me, like like why am I doing that? Like, that sounds nuts. And it still sounds nuts to me, but intellectually I know. But then when it doesn't, when the wallet full of digits, whether they're Bitcoin digits or fiat digits or whatever kind of digital data, whenever everything goes down and we don't have access to those digital whatevers or paper whatevers, then we're all going to start carrying around sacks of gold and silver. As crazy as it sounds, it's going to happen.
It sounds extreme, but history proves that every fiat currency eventually returns to zero. If you want to survive the coming reset and protect your wealth, make sure to hit that subscribe button right now. Now, let's look at why the banks are actually empty.
Yeah, and Rafi, and as you mentioned that, banks don't have all your money. Like if everyone, like let's say in my city, or go to their banks to try to take out money, they're not going to have it all. They only have maybe like a 1/10 or 2/10 of what, because they don't have it all on their books. They lend out 10 times more than they actually have at the actual bank. So realistically, they don't have your money.
Well, let's sharpen that, okay? Yeah. So they don't. First of all, they don't have any money at all. Because they only have derivatives and they only have credit derivatives. Even the dollar is a credit derivative, right? But they don't even have dollars. Is just like there's layers of credit. There's gold and silver, and then after gold and silver, you start the credit layers, right? So they have credit. They have your credit, but what they do is you give them credit level 1, like dollars or Canadian dollars. That's level 1. And then they take the dollars and they give you credit level 2, 3, 4 without telling you that it's credit level 2, 3, 4, because they're using credit level 1 to generate more credit for somebody else. Right. So they have like a ghost of your credit in either debt to you or stocks held by a brokerage. Even the stocks that held in your brokerage, a lot of them are lent out. So the credit that you think you have in your brokerage isn't exactly that level of credit. It's some higher level of credit derivative. So it's like you have the reflection of what you're supposed to have, right? But then when it all comes crashing down, it's the currency itself that is revealed as the reflection of gold and silver that it actually is, and that's the final piece that nobody can accept, not even us, because still we don't want to walk around with gold and silver in our pockets, but we're still intellectually aware that's going to happen.
This is the scary part. The money in your bank account is just a ghost of credit. It's a promise from a system that is fundamentally insolvent. When the music stops, those digits disappear and only physical assets remain.
So when the final credit layer goes away, then everything breaks apart and we're in a completely different world. I think AI goes away. I think all this stuff goes away because I've looked at AI's earnings and the fact that it's kind of getting stupider. It's not getting smarter. It's getting dumber.
Right.
It's not. I mean, I'll go into some kind of idea that I had this week or last 2 weeks. I was discussing it with my wife. Like, if you think about the first story of the Bible, the snake, right? if you take that as an extension of Eve, right, the snake is only telling her what she wants to hear. It's an external intelligence that's just telling her what's comforting her. Like the fruit is good, take the fruit. Whatever,
Right, like the AI market or the market.
Yeah,
right now.
that's what AI is. It doesn't lead anywhere. It doesn't lead anywhere good. I mean, this is going to go away.
It totally makes sense. What are your thoughts right now on Bitcoin? The Bitcoin crowd has always been like, "Oh, Bitcoin is the digital gold." What would you say to them now when you see Bitcoin drop 20-30% while gold is still and silver is holding its value?
What do you mean? Bitcoin doesn't drop 20 or 30%. Bitcoin is Bitcoin, right? Bitcoin is, it doesn't matter how many dollars it's worth. It's still money. No, obviously it matters, right? When in credit crazes, in boom cycles, right? People value a whole bunch of crazy stuff. That's what a bubble is. It's people valuing things that they wouldn't otherwise value.
Right.
And the quintessential, I'd say, piece of proof or evidence or proof, whatever you want to call it, that this is the craziest bubble in history is that people are literally valuing absolutely nothing.
Yeah,
nothing.
It's like tulips. It's worse than the tulips.
Nobody can tell me what a Bitcoin is. And then, it doesn't matter because money's a point system and it's a fiction that we all created. But that's the basic question, right? What is money a fiction? Is it a point system that we all made up, like a football game? Like, if you reach the touchdown, you get 7 points. If you kick a field goal, you get 3. And we make up these rules, and then we set up artificially this like playing field where the rules are even for each team, and we figure out who has the better skill with these artificial set of rules that aren't reality. And they're not reality because we need referees on the field to enforce artificial sets of rules. So if money is that, it's an artificial set of rules, then anything could be money. Even nothing could be money. But the question is that what is money really nothing?
No.
No, because it has to go into the past. And in order to go into the past, you have to be connected to something.
This is a controversial take, but follow the logic. If money isn't anchored to something physical and historical, is it really money? Or is it just a modern tulip mania where we are assigning massive value to absolutely nothing?
So then the question is, if it's nothing, why does it have value? Because when there's a bubble, people can be insane and they can value nothing. It's possible, but it's still nothing. And once they value something instead of nothing, then nothing will be worth nothing and something will be worth something.
Yeah, and I feel like that turning point is happening even at this moment where you start seeing institutional investors, you start seeing people starting to wake up and they say, you know what? If the whole world just allocates 3, 4, 5% more of their investments into gold, then, people are slowly starting to wake up. But I feel like but you're right. Like we're still basing our money off of nothing. Like we're not going to walk around with gold and silver in our pockets. Yet.
Not yet.
Not yet. But because I feel like we're working towards $1, like for hourly, we buy groceries with fake dollars, fiat currency. So maybe that's why we're just holding around that currency in our pocket,
Well, let's sharpen something you said about 10 seconds ago, right? If people allocated 3, 4, 5% to gold and silver, right? First of all, we flip that on its head, right? When you allocate to gold and silver, you're not allocating your money to gold and silver. You are divesting from the system.
Right.
You're not investing in anything. When you have physical gold and silver, you're divesting from everything else. You can't invest in money. Money is what you get when you sell your investment.
Stop thinking of gold as an investment. This is the ultimate mindset shift. You don't buy gold to make more dollars. You buy gold to exit the dollar system entirely. It's not a trade, it's an escape plan.
Yeah,
right?
Well said.
When you sell a position, what you're doing, like how we do it colloquially in a brokerage, right? We sell a position of stock with the sell button, close position button, and then we see that we have a whole bunch of more dollars in our brokerage account. Fine. So that's divesting from whatever the dollars were invested. But the dollar itself is an investment. It's an investment in the Federal Reserve as a solvent bank, That's what it's a Federal Reserve note. So if you want to divest from that, what are you going to? How do you do that? The only way to go underneath the Fed is with money. So what? But that's the problem, Ivan. Because when you start saying, oh, if everyone allocated instead of like 0.1%, 2, 3, 4, 5% to gold and silver, but because it's divestment, once people start to divest to that degree in the entire fiat debt system, then it doesn't stop there. It goes to 100% eventually, and they sell everything, right? And then the only thing that has value as money is gold and silver. Yes, real physical assets have value, but very illiquid value, and it depends who you can sell it to, right? Your house will have value, but if you have no food and all you have is a house and you have to sell your house for like 2 weeks of food, that's not a good deal. You could do it, but you'd rather have a liquid commodity to do it with, so that you'd still have a house and you'd have like 3 or 4 or 5 ounces less of silver. That's fine. Yeah. So you don't stop at 2, 3, 4, 5%. Once we get to 2, 3, 4, 5% of people buying gold and silver, because it's not because they want to allocate 5%, because their investment advisor said, oh, now I'm up to 5%, and this is what it should stay at. It's like it's as if you could like tilt the slide of the entire system and then not expect everything to fall down.
Right? Yeah. You nailed it. Hey, you nailed it.
It's gonna happen.